Hello everyone, thank you very much for joining us today at the panel discussion on the use of technology in AML. My name is Paloma Garcia, I'm the head of the payments practice at Afore Consulting, and it's a pleasure for me to be here with you moderating this session. The purpose of this panel is to explore how the use of technology can help in the fight against money laundering. We will also look at the regulatory issues and see how do we make sure that the EU legislation is in line with the new technological developments and allow companies to deploy these technologies across border. So let me first introduce you to our panelists today. So we have Eero Heinalouma, member of the European Parliament. We also have with us today Noé de la Rubia, Criminal Intelligence Officer at Interpol. Tom Shane, AI Product Lead at Google Cloud. Darren Ennis, Vice President, Head of AML Technology at Nasdaq. Kate Salutolo, Vice President, Head of AML, Anti-Bribery and Corruption and Brand Risk Manager at PayPal. And last but not least, Hartwig Gerhartinger, Vice President, Deputy General Counsel at Paysafe and also Chair of EPIF Technical Committee. So thank you very much to all of you for being here today with us. Unfortunately, Eero Heinalouma will not be able to stay with us for the entire session. So I will pass to you first, Eero, so you can maybe give us the Parliament overview. We have a big package from the Commission coming out soon. And we wanted to get your views on what is it that you envisage and how do you think we can make sure that EU legislation allows companies to deploy technologies across borders. Over to you, Eero.
Thank you indeed. Thank you for the invitation. And congrats to Afore for setting up this high-level conference already for the 5th time. And as you said, unfortunately, due to the agenda constraints, I have to leave after my intervention and presentation. And the reason is that I'm meeting with Commissioner Gentiloni, and this was not the timetable which I could decide. So looking into the AML facts, there are 3 main figures demonstrating the urgent need for reform, and especially from the Parliament side. According to the Commission, around 160 billion is involved in suspect financial activities such as money laundering connected to corruption, arms and human trafficking, drug dealing, tax evasion and fraud, terrorist financing. And this is more than 400 million euro, which is laundered on a daily basis, so extremely high figures. And according to Europol, for the period 2010-2014, 2.2% of the estimated proceeds of crime were provisionally seized or frozen, and only 1.1% of the criminal profits were confiscated at EU level. And the third fact is that for example, from the True Cost of Financial Crime Compliance Global Report, we have learned that it's billions and billions which are the cost of financial crime compliance worldwide and also in Europe. So there is a really change needed, and in the Parliament there is a very wide opinion that now it's the time for change the system and make such kind of decision that we can really stop these kind of activities. I had the honor to chair the task force of SEPS, anti-money laundering task force, and it was a huge opportunity to look a little bit closer what is happening on this sector. And my understanding is that this is really a complicated area, and where we don't have one silver bullet to resolve all the problems. We need all the stakeholders on board. And especially I welcome the initiatives and activity of the industry on these figures, because we ought to exchange experiences and have all the ideas and the practical knowledge what is happening on the field from your side. So I hope this kind of meetings will be arranged also in the future, and I'm pretty sure that also the Commission is ready to take on board all the constructive ideas which you have. So political understanding and consensus is important. At the same time, need to make sure the new regime will work and that it will work better than has been in the history. More, I see an important role for technology and cooperation. I come back to this a little bit later. First, what does the European Parliament expect from this reform? Let me focus on 5 key points. First, a single EU rule book to ensure a better implementation of EU rules. Pretty sure that the regulation will be better than a directive. The time of directives is now over, because directives have lead to bigger fragmentation, and now we need for clarity and certainty, both for authorities and also for industry. Second, better regime on supervision and organized by one EU supervisor is critical from the Parliament point of view. The task force which I was leading was a little bit more moderate, and it's supposed to go step by step, first to increase the rights of European Banking Authority. In any case, this is an important thing. There have to be some kind of supervision at the EU level. This supervisor should work in close cooperation with the national competent authorities and have the right tools and resources. The new entity should cover financial and non-financial obliged entities with direct supervision powers over certain obliged entities depending on their size or the risk they present, as well as supervision of the application of EU rules by national supervisors. Third, better cooperation amongst financial intelligence units. Therefore, the European Parliament is in favor of interconnected and high-quality registers of beneficial owners in the Union. It further believes that the threshold for the identification of a beneficial owner should be lowered, and suggests that creation of publicly accessible registers for beneficial owners of trusts and similar arrangements. Fourth, stronger enforcement is needed. We need to go towards a stronger harmonization of the underlying crimes, and the sanctions need to become more deterrent. This is, of course, a very complicated and sensitive matter. Pretty sure that it will take time, but the work must be started. A bigger role for Europol and the EU public prosecutor could be a step forward also here. And fifth, third countries and the way the Commission is identifying high-risk third countries. European Parliament believes that this procedure could be strengthened. A particular focus also on the United Kingdom now is needed. The way United Kingdom implements AML rules should be taken into consideration in the equivalence assessments. In particular, problematic that they are not applicable nowadays towards the crown dependencies. So this will be one of the focus of the Parliament. And of course, I'm aware that these are ambitious demands, but I think that there is no alternative that to go further and to clearer and more strict rules. Status quo is not an option, and certainly not today after the several scandals we have been reading. To achieve these reforms, 2 key elements are critical: the private sector and the technology which you are discussing today. The private sector, the obliged entities, it all starts with them. Despite these 5 directives, a small group of actors still try to find loopholes, helping criminals laundering their money. Because of this small group, the big majority of honest players suffer from sometimes painful and expensive reporting exercises. This is not very proportional and has to change. We have to collect less but better data, more risk-focused. So more use of artificial intelligence to detect suspicious risky patterns, more streamlining from templates. IT systems and know your customer documents are essential. I expect that a better cooperation between financial intelligence units can contribute to streamlining processes. Furthermore, for the private sector, it's critical to get proper and timely feedback from financial intelligence units around the SARS, and this is not functioning now, as we all know. And at the same time, I suppose there is need also for more deterrent sanction for those who really launder the money in the future. So collecting faster and more relevant data is one thing. Analyzing them correctly and drawing the right conclusions is something else. Here, I'm sure that the public and private sector can learn a lot from each other. And this demand goes mainly to the public sector. Therefore, I look forward to ambitious guidelines from the Commission later this year. And finally, GDPR is a key piece of EU legislation. Day after day, we see how vital it is that our private data are properly protected. At the same time, in the fight against money laundering, we need to strike the balance right. It ought to be so that the GDPR is not safeguarding the rights of criminals. GDPR could not and should not be an obstacle in an effective flow of data between private players and financial intelligence units and law enforcers. So prosecutors should get the right tools to ensure that criminals cannot escape by hiding their proceeds behind legal structures. And to conclude, reforming AML is a big task. After more than 30 years, the amount of criminal money which is caught is completely suboptimal. I believe the right introduction of technological tools and a better cooperation with the private sector could be a critical step forward, and I'm convinced the expertise of the panel today can make a very valuable contribution to the debate. And I really hope that the industry is active and makes its voice heard in the decision making. And this is the sincere hope also from the whole Parliament. Thank you.
Thank you, Eero. Thank you very much. I think you raised very interesting points that we will be touching upon during our panel discussion today. Maybe I would like to start with Noe. If you could give us your point of view from the law enforcement perspective, and what is it that you're seeing at the moment? What are current trends? And also, do you think that technology can help and to improve the situation?
Thank you very much. Paloma, can you hear me? Okay. Well, hello everyone. My name is Noe de la Rubia. I'm seconded police officer from the Spanish National Police, currently attached at the Interpol Financial Crime Unit. First and foremost, thank you for the invitation and organizing this wonderful conference amidst this challenging period. I'm certainly humbled to be given this opportunity to contribute from what Interpol has seen in this field. Judging from my experience of the last almost 2 years in Interpol, there is a notable increase in reports from member countries in regards of financial frauds and money mules associated with them, especially since the beginning of the pandemic period. It is true that this stream of reports doesn't affect all members countries in the same intensity, because we are always seeing a certain bunch of countries involved, and also banks. However, it doesn't necessarily mean that the ones unaffected have implemented stronger legal measures or more successful AI solutions. Rather, this disparity results from different factors more related to the facility of criminals to find people willing to provide them support along with their knowledge of the bank's international functioning, deeper in some countries than in others. Thus, it's much easier to find more candidates within the biggest banks of most developed countries in Europe, for instance, that are struck by this other pandemic of financial fraud, if I can put it in these terms. To complete this explosive cocktail, we need to mix a third ingredient, which is the fact that in those large country banks, the volume of daily transactions, including the ones considered suspicious, is just huge. Frankly speaking, I will say unhandled by any compliance or fraud department in the traditional rules or tools. Honestly, I don't have exact figure in the level of AMLs. I know you very well know that, I mean, many companies in the sector are using machine learning for other purposes, but according to my experience, based on my daily contacts with banks, it seems to me that the rate is still quite unsatisfactory. Just a few applying these kind of tools, honestly. I'm quite sure that the financial institutions are doing the best. They are investing a lot of resources and paying much attention to this issue. But as a proof of that, I have to say that in many cases, the beneficiary bank account used as a mule had already been under surveillance, or what is more, it had already popped up in a previous complaint. But due to the bank's internal policy, it was not agile enough to respond accordingly. I have some cases that it takes up to 3 months to block an account, or maybe because of the legislation to proceed is not clear or doesn't provide a necessary and robust enough response. So the bank doesn't feel comfortable to take this kind of measures. By the way, just last week, Interpol hosted a worldwide webinar for professionals in the fight against money laundering, and the vast majority of the attendees, by far, around 50%, came from banks. So I think it means that they are really concerned about this topic. Having said that, I consider this field the easiest part of the game, because there is another one probably more important and above all more difficult to win. I'm referring not just to the financial fraud itself, but also to the detection of more complex laundering mechanisms, such as international trading or other type of crimes, such as VAT fraud, in which it's necessary to interlink different bank accounts, clients, information, and many other pieces of the puzzle. And that definitely requires a more in-depth investigation mechanism. And I believe that today we are far from having it in place, but I trust that in the future we may have this kind of technology solutions that allow us to implement it. Well, I don't know if hand over the floor to anybody. Well, as an introduction, well, I mean, the scenario is not so bad, but I mean, there are some things to solve and to fix. Yeah. Well, thank you.
Thank you very much, Noé. No, I think you raised very good points, and maybe one thing that it's very important, and I think Darren and probably all the speakers will agree with me, it's about information sharing. How do we use technology and how do we improve that information sharing and the information that companies feed into law enforcement, but also the feedback that you get back? I don't know, Darren, if you have any views there.
Yeah, thank you, and likewise, thank you for inviting me to talk on the panel today. It's very kind. Yeah, on information sharing, we all know that we're better as a whole than a group of individuals, right? We get a better picture of everything that's going on, and if we have that picture, we can work together. But to do that, we need two things. We need a strong regulatory framework to enable us to do that, and then we need to provide the banks with the confidence in the technology that's used that encourages them to become part of that framework. So one of the things that Nasdaq is looking at and wants to encourage other countries to do is to focus or to potentially use what they use in the US, which is the Reg 314B and 314A model for sharing information. So 314B is about sharing and cooperation and collaboration between banks, and 314A is very much around collaboration and information sharing with law enforcement and financial organizations. But to do that, we need to encourage or make people confident with the technology that's used. And there are advances in that technology that we see that are going to add huge value. The first of those being what we call federated learning. And federated learning is about not sharing data. It's not about sharing personal data, but it's about sharing insights from what we've actually learned across a wider breadth of data, and then sharing those insights and those models and effective models to banks and other institutions that will enable them to create best practice. So you're learning from each other without actually the sharing of personal data. So that's one area where we see can help with information sharing. The other area that we feel is going to make a large advancement in that is homophoric, I can never say the word, I apologize, but homophoric encryption. And I love that Hartwig is laughing at me because he probably knows this inside out, and I'm sure he'll talk about it more. But homophoric, here we go, encryption is allowing organizations to share data but retain complete control and control over the access of who can actually see that data. And then it provides kind of evidence of what's gone on at an incredibly granular level. And what that means is it can't be leaked, it can be assessed, it can't be leaked or assessed outside the bounds of whatever's permissible. But it is a new way of adhering to privacy regulations whilst allowing organizations to collaborate. And I think that's very exciting. I mean, at Nasdaq, for example, we see huge potential in these technologies. You would have noticed recently that we recently acquired an organization called Verifin. And Verifin runs two of these large data sharing networks in the US, one for about 2,000 banks under Reg 314B. And what we allow there is, what we provide the infrastructure for, is the ability for banks to send alerts about its bank customers to other banks, and then investigate those collaboratively. It provides analytics and insight, which means we can start to get ahead eventually of the criminals and the criminal activity. You mentioned, Noah, about mule accounts and the fact that they're persuasive across multiple organizations and in fact multiple countries. If we can get earlier sight into those and that data can be shared across multiple organizations, that can be, or we can make a dent in it. We're never going to stop everything, but we can certainly make a dent in it. And that's the power of these kind of networks. But the bottom line, we have to bring data together. If we can accomplish this, we got more of a chance of encouraging or improving the resilience of our industry today.
Thank you, Darren. Yeah, no, I agree. The importance of data and the quality of data is also gathered there. I wanted to ask you, Kate, if you could maybe give us your views on the role of technology in general and how it's bringing benefits in the fights against money laundering and terrorist financing.
Yes, absolutely. And thanks all for having me. We'll probably piggyback on some of the comments the panelists have made. For folks familiar with PayPal, we facilitate payments for consumers and businesses globally. And the typical customer at PayPal transacts in amounts, typically less than €70 per transaction. We have a large customer base and we transact globally, but what's out of pattern for PayPal or concerning for PayPal may look very different than from a traditional financial institution based on how our products and services work. So for us, data, information sharing, and sort of proactive and reactive approaches combined is really how we approach our program. And certainly applying a risk-based approach that is accommodating to our business model. One of the things that I will say, that I think we all agree on is the aspect of information sharing in both the private sectors and the public-private partnerships is paramount. One of the things that we've invested in from a technology perspective is overlaying all of the intelligence that we receive from law enforcement, either directly through requests for information or STR backup documentation, with our own data and external insights that we can glean from open source intelligence. And if you think about, our user base and those folks who are using our products, we have a powerful element of data internally that we can use responsibly to identify anomalies and concerning patterns of activities. But we also leverage, open source research to overlay against our internal data. And increasingly, the technology and the automation with which you can overlay internal and external data has become more advanced. I think historically, financial institutions have had thousands of investigators that get a rule-based alert, look at it, have to go comb through the internal records, go do a whole bunch of external research and try to tell a story, right? I think a lot of that today through machine learning and just, plain automation can be served up and packaged. And ultimately, what we can use our investigators for is to draw the insights and the patterns and the trending, and then continue to invest in some of those partnerships. We've had great success, particularly across the EU, in partnering with the FIU in Luxembourg as an example, and really soliciting feedback. Are our STRs helpful? Are you able to get what you want out of those? How can we improve? And so I think the more ways in which the regulatory framework can encourage that type of open dialogue and sort of formalize some of that feedback. And so financial institutions understand if they're being helpful, how they can be more helpful, and also have an avenue to suggest changes, right? Changes in technology or automation. I think there's often a hesitation to explore new technologies because, technology is emerging so rapidly. If a regulator hasn't reviewed that yet, or it's not the common practice to apply certain modeling or machine learning or automation to your program, there's a fear that might not be well received. But I think if we are given that sort of framework to say, here's kind of the principles, the guiding principles for piloting new technologies, right? You implement it over a population, you optimize, you test, you tune, you read out on your results, and maybe share and socialize that, right, before you implement full scale. So I think having discipline in how we use these new technologies and advocate for them is really critical. And certainly, the upcoming framework and the principles of which we're excited to learn more about can help to foster, I think, some of that collaboration and innovation over time.
Thank you, Kate. Yeah, fully agree. I think it's very important. It's also important to build trust on those technologies so everyone feels comfortable using them. I agree with you. We mentioned the use of AI and machine learning. I wanted to ask Tom, how do you see that the use of AI can improve detection and also compliance with other requirements?
Hi, everyone. Thank you for having me, and been excited to be here. So at Google, we believe AI can really help transform the detection and prevention of money laundering. And I think as we've seen, the rules-based systems today are not identifying large portions of money laundering that's happening and lead to many false positives that can divert attention from some of the real risk that may be going on. And so we think 3 core capabilities can really help here. The first is creating a holistic view of the customer and really building a strong data foundation. The second is going and applying specialized AI, and I'll talk more about what that means. And then the third is making sure we have human understandable explainability to provide the right outputs to the investigators and other people on the receiving end of these systems. So when we think about a good data foundation, again, it comes back to creating that holistic view so you can understand how the customer's transactions and other events fit in context. You're not looking at things in isolation. One example of this is better understanding and extracting information from documents, whether in the KYC process or in other product onboarding, whether it's a mortgage or something else, and feeding that information in to the overall data system. And what you're doing there is you're really extending the schema of information that you have so you can put things like transactions into better context and better understand the risk. So really, we see step 1 is organizing that data into a holistic view. On specialized AI and with data in order, we think it's going beyond just the rules-based system to AI. It's not just general purpose AI, but really specializing it to the domain. And I'll give a couple examples. if you provide just a general purpose anomaly detection technique to account data, you're going to find a lot of anomalies, but you're going to find it's identifying all the highest value accounts. It's not really identifying the real risk. And so finding ways to embed things like known patterns of here's what structuring looks like, or rapid movement of funds into the model itself actually helps you much better identify the real risks going on, and being able to look at anomalies in context of a person's overall behavior. So, this spike in transactions is way different than what's happened before. What does that really mean? And we think this can only be done when you go to more specialized AI versus just general purpose off-the-shelf AI. And then the third thing is, again, humans are on the receiving end of these systems, and they need to be able to understand what's coming out of the AI model to actually be able to investigate a potential alert appropriately. So, the traditional explainability methods that you see today are often something called feature importance. This takes a look at an ML model and says which features most contributed to a particular prediction. This is great for data scientists as they're building the model, but these ML features can become quite complex, and it's not always obvious how a business user, potentially without a machine learning background, should interpret these. So focusing on how we can up-level some of the information coming out of the systems and provide things that are more human understandable. For example, like this is a rapid movement of funds alert for these reasons is a much better starting place for a lot of these. So just a few thoughts on some of the three core things that we think could really help here.
Thank you, Tom. And maybe just a quick follow-up question. Do you see any barriers impeding the take-up of AI? I don't know, when it comes to data quality, legacy issues, or even like a company culture. I don't know if you have any views on that.
Yeah, it's a great question. I think, this is really a transformational journey in a lot of ways on taking a process that's been done one way and really upending it with AI. And so I think, a lot of the things around how do we put in proper testing policies and measurement and moving towards that culture of testing, iteration, and measurement, I think is honestly the first step in that long transformation journey.
Yeah, thank you. So coming to Hartwig now, I mean, we've talked about information sharing, use of AI, machine learning. I just wanted to get your views on how do you see the role of technology and on fighting AML and terrorist financing?
Yeah, thanks, Paloma, and good afternoon to everyone. Thanks for having me. Great pleasure to be here. I have a very nice memories to the last conference. So it was the last conference indeed that I attended in person. So yeah, pleasure to be here. I think, look, there have been quite a number of really good comments, and I would just like to maybe follow up on some of those. So one was obviously, I think the quality of data and maybe data that you have in your systems. And I think the one comment I would like to make in terms of the quality, it may be very different when you look into traditional banks or traditional players in the space and new market entrants like fintechs. And I mean, fintechs is not just new startups, but also established players like PayPal or Paysafe. But we built our business models at a time when technology was already very advanced, and we maybe use newer technology, and it have therefore maybe a better way of getting data out of our systems. And the second thing is we may have also more targeted business models. So it's easier for fintechs to focus on their specific offering. Sometimes you feel for banks, I mean, with the vast majority of the different products that are offered and the different use cases. I mean, you have everything from the one who uses the debit card for only doing the shopping, from that tiny kind of transactions towards like $1 million or $1 billion transactions that happen also through the systems. So it's really difficult to calibrate these systems, and I think for fintechs it's sometimes by nature you have maybe a better data quality, and you have also a better kind of starting point when it comes to making sense of those data, and therefore also to use new technologies. And yet I think we are talking a lot about artificial intelligence, and that is kind of the thing that helps. And obviously, yes, it does. I mean, it really increases efficiency of processes that you have, and it helps tremendously to improve. But at the same time, it's not an isolated solution. So you're not purchasing an AI solution and then this solves all your problems. It really comes down to how you apply it in practice. And here I think it is really key what was mentioned earlier as well in relation to getting comfortable and testing it. So AI is only as good as your underlying data, but at the same time also how much time do you invest to target the AI, to make best use of the AI that you kind of have in order to apply it to your own solution. And that kind of may in a very early stage just really be helping drive efficiency of already existing processes. Maybe clustering cases, maybe seeing more than you did before, but it's not like you press a button and then things happen and everything is spotted. And then maybe the last point I would like to mention here at this point is what was mentioned around I think typologies. So it's interesting because in some of our products that we offer as Paysafe, they are proprietary. So you basically have your own platform, and you contract with customers and merchants. So it's your own kind of scheme, and you see a lot therefore in terms of because you have all the data points in your own hands. In some cases, this is not as easy because you have various different players that need to interact in order to see everything. So I think from that perspective, it's really interesting that there is a lot of information once you kind of complete the picture. But that doesn't mean that you can only be successful if you complete the picture. But it's just really interesting to see that the fintech players, maybe even when you have your own platform, they are not isolated. So they interact with other payment or players in the payment space, like banks and other PSPs. So I think it is maybe indeed this sharing of typologies that you see, which makes it really valuable for everyone. Not even speaking about the data and the underlying sharing of the data itself, but the typologies would already be a very good starting point. I think this is also what Interpol is kind of looking at when you speak about what you see in the scene at the moment happening in the space.
Thank you, Hartwig. Thank you very much. I see a question came in, and I'm just going to read it out loud. It says, do you think that the future of compliance officer is compromised due to innovation we see under technology, or is it the opposite? I don't know if anyone wants to take this question.
Yeah, I can take this one. I don't see the future of them being compromised at all. What I see is the technology, if you like, augmenting their role, enhancing their role, and giving them more time to actually focus on what they really signed up to do, which is investigating crime rather than investigating good customers. Because at the moment, it was touched on earlier, the billions banks spend every year trying to fight this crime. And the majority of that money is actually spent investigating customers that are doing nothing wrong. So I think these technologies can actually enhance what people do, like give them time to investigate cases. We actually have taken AI to a point where we can replicate the decision-making people actually take, rather than just giving them information or automating that information process. We can replicate what they do today. And if we use that to clear, good customers. So we replicate and make decisions on what a client or what a bank compliance officer is spending way too much time doing today. They can then dig in, investigate the real cases, provide better SARs to the law enforcement, and hopefully make a more meaningful impact as we try to fight financial crime. The compliance officer is not being replaced.
Yeah, maybe I can offer a couple of comments. I think I totally agree. I think perhaps the skill sets may evolve, right, of a compliance officer. I think traditional AML programs historically have been, you've got like a policy function and folks are kind of drafting the highest level, thou shall not do X, Y, and Z. And then you've got an execution arm of, customer focused account level investigators looking at alerts, right? I think where programs are moving is there is a much more, I think Tom said it, holistic approach to managing this risk with the technology embedded at the core of it. So we can't really write policy without thinking about those technology solutions. And so I think there is, definitely an evolution of this skill set and being, mindful of the way in which technology really sits at the center of all aspects of these programs. But certainly the role will be increasingly important, particularly as it relates to the explainability. The more we do that's innovative, as Tom mentioned, the more important it is to be able to say, this is how we are, running these processes to isolate what we feel the risks are. And this is how we get comfortable that we're covering those risks, right, in this environment. So I think that, we have to continue to have the right executives who can explain that end to end.
Thank you. Good, then I will pass now to the regulatory side. I think Eero mentioned very good points on what might be coming out of the proposal, but I wanted to ask you, Kate, because PayPal is one of the oldest fintech, and it's been well known for being providing very innovative products to customers. So I just wanted to get your views. Do you think that the AML framework is actually conductive of innovation?
I think in many respects, yes. I think where we definitely advocate for additional change and sort of acknowledgement of different product services and business models is around harmonization. I think for any global company that has a broad presence, just the nuance across regulatory frameworks can sometimes be challenging. For example, we'd welcome continued harmonization across the EID space and onboarding and KYC. And PayPal is sort of uniquely positioned in many respects with regards to the data environment that we have, where we have consumers and merchants and own both of those relationships. So our ability to see what's happening as a customer comes on, who they're transacting with, where, what particular items are being purchased that may be something of concern, and to build sort of that data-rich monitoring environment is really where we invest a lot of our time and energy. And on the onboarding side, as folks come in, often they'll come in and do very low dollar transactions at a large merchant for goods and services. And so those are not the customers that we would typically require identity documentation for, right? So our risk-based approach is really tailored to where our risks lie, which is in that middle layer of the closed loop transactions between those consumers and merchants, who often have their linked financial or funding source with another traditional bank, right? So that's where the information sharing comes into play, and the collaboration, and where we want to be helpful to both law enforcement and private partners through information sharing is on the typologies we see in the middle there. So I think, having that ability to create a risk-based approach and to really ensure that we can continue to represent, here's how our products and services work, here's where they operate and how, and here's how we basically measure up in our risk assessment, our controls against those risks. That may end up with a program that looks a little bit different than another financial institution. And I think it's important that regulatory frameworks continue to acknowledge that. And, I think that's why we all really focus on, is the risk-based approach right for us, and being able to explain that and how we've built it.
Thank you. You mentioned the importance of harmonization, and I think this is something that the industry have been repeating very often, and I think everyone is very happy to see that the Commission now it's going forward to move from a directive to a regulation. But I wanted to ask you, Hartwig, maybe have you faced any challenges when it comes to different requirements among member states?
It's, I think, harmonization in general and harmonization in AML in particular is maybe on everyone's mind, really. I mean, it's, payments are becoming European and they are becoming global. And yet you feel that the AML legislation is somewhat trying to remain domestic, local almost. And I think that's the wrong approach to deal with the challenges we see right now, not only from an industry perspective, but also from an authority perspective. I guess so. I think it's not only that there is a lot of issues. It's also, I mean, it can be, if we see it not as just an obstacle, as a problem we have to deal with harmonization, but if we see it as a chance, it can really be a big differentiator for Europe to become, or for actually every market where you have harmonization, to become a real market thriving with innovation. And I think, when that is a message that you kind of hear at every conference, really, but it's true as well. I mean, if you look at, for example, innovation, so innovative solutions that are kind of launched. I mean, what is key really, if you look at the product, for example, is that you design, for example, a customer onboarding process in a way that obviously reduces friction. So you want to kind of streamline the onboarding process. You want to kind of make sure that the customer can actually familiarize themselves with a solution, with a product, with an offering. You log in, you kind of sign up, you log in, and then you can start transacting, the low dollar, the low euro transactions that Kate mentioned earlier. I mean, this is what customers typically do. No one comes in and says, oh, I would like to do $1 million transaction. It's more, the millions of customers who want to do low dollar transactions, just to try new solutions in the market, which are maybe a better fit for their needs, for their payment needs, faster, cheaper, more convenient, whatever it may be. But in order to design a process, it is really key that you can also roll that model out across Europe. So I think it's what really makes it difficult when you look at the rollout of products in Europe. Is just a lack of harmonization in the KYC process and in the use of new technologies, like, for example, video KYC and how you collect information about customers. So I think that's one of the biggest hurdles, and I mentioned this specifically because there is, I think, where I see the biggest difference across the European landscape, really, when it comes to this regulatory requirement of identification and verification of customers. And yes, I think it has a lot of unintended consequences, because I think every member state looks at their own country and said, well, for me, if you do this, you can actually service the whole country. But yet that may be true for bigger countries, but I think we need to face the reality as well. For smaller countries, for example, that may mean that that products are not offered at all in certain jurisdictions, because of the fact that actually it doesn't pay off to do the additional, or there is a certain delay for products to be offered in certain markets. So I think customer onboarding is key, and we really very welcome the initiatives around eKYC. But I think there needs to be room for additional solutions that are developed alongside. So I think it comes down to this the regulatory acknowledgement in many cases is just taking a bit too long for this solution is now acknowledged. So you would want to actually put a bit kind of the ball back into the responsibility, where it anyways is, back to the firms and their home state regulator to say, look, this is the process, and with this process we would like to launch in the whole of Europe. And I think this requires as well some sort of collaboration and trust between regulators as well. So you say, well, if one home state regulator acknowledges a certain process of onboarding, this is something we are going to accept. So that's one thing. And I think the other thing really is when it comes to the use of technologies, I mean, the points were made earlier in terms of new technologies, AI, really powerful. We see a lot of innovation happening there, yet this innovation does not seem to be fully acknowledged. I mean, as I said earlier, the industry is taking a very cautious approach in using that technology, I would say. You know, you do testing, you do only 5% of your customers, you do a small portion of your business, try and test, is it better, is it worse than before? But I think, you know, when it comes to the risk assessments, when you look at the supranational risk assessment, for example, there is a lot of talk around the risks, but there is little acknowledgement about, you know, that new technologies can actually mitigate those risks. So this angle is completely missing, and it seems to me that that there is a lot of work that needs to be done. We need to have a frank and honest discussion about recalibrating the supranational risk assessments, in my view. And this is, I think, the second big hurdle for the use of technology in Europe.
Thank you, Hartwig. I think you mentioned a very important point on the risk mitigation. I think there has been a lot of focus on the risk, but how is it, what do we have now to mitigate those risks? So you cannot make an assessment on just the risk. You need to have a broader picture to look at. So I think that's a very important point. And you mentioned also points about onboarding and KYC. So yesterday we had a panel on KYC, and Jan Seisens from the European Commission said that they are working towards a more harmonized EID framework. And I think that's a very important, especially for when it comes to electronic KYC. And he mentioned that the industry also should point out what is it that we need to look out, so they know what are the specific issues that they need to be looking at. So I don't know if anyone has any comments there, if you could.
I mean, maybe I can offer a few comments. I mean, definitely, I think I mentioned previously the harmonization on EID is certainly welcome. You know, I think where we often focus is really thinking through what is it that we are collecting from customers and how are we using it. We should never get something that we're not using, right? So everything that we get, we're going to scrutinize, and whether that's interrogating it through traditional verifications or even EID schemas, or bumping it up against what do we know about this data point outside external to PayPal. You know, I think approaching the requirements and the regime with an eye towards, is this information as it comes through the door something that is going to add value to the ability to combat financial crimes? A lot of what we see globally are kind of an additional element here, additional element there. And certainly, you know, there are unique risks around the world that may warrant that collection. But I think understanding the useful nature of what's going to be collected and then how that is then input into what we ultimately verify on the back end is critically important. I think as we harmonize from a technology standpoint, every time we go to integrate with a solution, today it's very separate, right? We know there are many different vendors that we use in this space, whether it's to do video KYC or liveness detection or scraping off of documents. There's a large suite of those tools. And so I think as we move towards a more seamless way of doing that, an acceptable kind of harmonized framework, those technology intricacies should be explored as well. You know, can we integrate with multiple schemas through one API, right? And there are solutions that do that, but depending on the global footprint of an institution, these are all sort of the in the weeds details to implement that folks will be grappling with. So definitely exciting, the opportunities in that space, but certainly just thinking through the requirements in the first instance, and are they fit for purpose in terms of mitigating risk? And then ultimately, you know, what does the implementation kind of look like from a technology standpoint?
Thank you. Thank you very much. I see a question coming in that says, why do you believe a regulation will make a difference regarding harmonization? the problem of AML4 is not a national implementation, but it's just a difficult piece of legislation to understand.
It is a difficult piece of legislation to understand. I think that is a fair comment. And I think the main difficulty when it comes, to the point I mentioned earlier around, customer due diligence, KYC, onboarding, it just, promotes a risk-based approach. And the risk-based approach is difficult per se, because it's not a one-size-fits-all. It's very targeted, it's very detailed, and specific to specific products, specific companies, specific markets. So it's not easy as a concept to understand and apply. And this is why it requires this interaction with, ideally, the home state regulator only, so that at least you get comfortable as the one entity, or kind of the one authority licensing the respective firm for applying the risk-based approach. So I think that's the difficulty of AML laws, I guess, in terms of how they need to be applied in practice. It's not just straightforward. It requires a lot of expertise and understanding and knowledge. At the same time, I mean, obviously, where we are struggling and where the industry is struggling is, that even though you have a fairly harmonized, kind of directive, it still leaves room to local legislators and domestic legislators to implement it in different ways. And this is the struggle, I guess. You have slight differences in each country. And in many cases, I mean, they can be factored in some cases they can't. And the question that everyone needs to answer themselves, or kind of ask themselves and find an answer, is whether it is really still the right approach to do that, or whether you would sit together. And this is, I think, also the where the lack of trust comes from. If a country goes a bit further in implementing AML legislation, a bit stricter, why would the local authority in that country trust the local authority in another country in the same way if the AML regime there is more relaxed? So I think this is the problem. We need to agree on a European level of AML. The difficulties of implementation and application in practice will not go away, but at least we are talking about the same thing. And you need a proper risk assessment at the European level, which, as I said before, is open, result open, unbiased, where we really recalibrate again, like the way we look at risk and mitigate.
Thank you. I see the chat is quite active, so we have another question. Let me quickly read. I think maybe just this one for Noé, because it says, we see technology developing all over the financial world. Are our state-funded law enforcement agencies or authorities evolving their systems and control, investing in technology to improve their supervision, as well as considering the budget constraints? I don't know, Noé, if you have any comments.
Well, of course, we have always the same budget problem. But honestly, I can say that, yeah, we have some tools to analyze big data. This is from another part of the investigation I'm not dealing with, because this is more for analysts. But of course, I remember one case that I was to deal with 500 bank accounts. So if you want to handle this in a proper manner, if you want to dismantle one organization, of course, you have to change your mind and of course use as many tools as possible. But yeah, this is cost a lot of money, and our bosses is still from the all ages. They still want to do the same work as you do, instead of investing money, because and also as it was mentioned, this kind of tool that can substitute our work, of course, because if I can say, you are like a dog. To follow a criminal, you have to have a special knowledge, sense, So, but of course, it will help. But it's really, really, really difficult.
No, thank you. And I think maybe I wanted to follow up, and I think maybe Darren, you have some thoughts here, because AML compliance is very costly, yes, and we see inconsistency in requirement and in processes, but actually when you gather the appropriate data and you apply sophisticated AI tools, you can have much more meaningful reporting. That this could maybe help when submitting the information. So I don't know if you could elaborate on that.
Yeah, I'm sure. It goes back to what Tom was saying about explainable decision making. And that's where we need to get to, and that's what tools today are starting to be able to demonstrate, and that will make it more meaningful. But to be able to get to that level, we've got to get the regulators to encourage the use of new technologies. At the moment, there are mixed rules between different countries, different states, etc., about what is acceptable and what isn't. And there are a lot of barriers or not perceived barriers in place for accepting new technology. If I do whatever was done, the regulator is comfortable with that, I'm not gonna be penalized for doing it. I'm doing what everybody else is doing. So there needs to be an encouragement from the various regulators to encourage the use of new technology and to help remove some of the barriers of parallel running for 12 months before I can put this into place, etc. But the new AI technologies are all about improving not only efficiency, but effectiveness. So if we can replicate what people do today at the lower end, we can give them the ability to be more effective. So that's very much how we see it. If you look at the spend today, we spend 3 times as much in operations than we do on technology in financial crime, right? Which is clearly not acceptable. And then the new technologies will help to change that. So what we'll see is from the spend being like this, we'll start to see over the next few years that spend becoming much more in line, that we're spending more on technology, and the people will be able to focus where they really are important. So that's the way that we see it going. Thank you.
Maybe before we go to the last round, Tom, do you have anything to add?
I have many thoughts here. I'll offer a couple. If we start from the premise of encouraging experimentation in the space, that to me is key, because once we start getting experimentation in place, then these organizations can see some of the significant value that can be driven from applying new AI techniques to the process, both to identify more financial crime and reduce the risk, but then also reduce alert volume and make it easier to remediate some of the cases effectively. And I think that starts to speak to some of the budget constraints that the organizations might see as they start to see the big potential value if experimentation is encouraged and they can see some of the early results, et cetera. So that I think is, again, making sure that we can experiment, get results, and then actually show the value. It starts to become much less of a trade-off from a budget standpoint, at least from what we've seen.
Thank you very much. I know we are close to our time, so I just wanted to give like last chance to everyone. If you could maybe mention 3 or 4 things that you think the EU could do in the next few years to facilitate the take-up of AI or any other technology, and also, of course, to react to any of the comments that other panelists have made.
I'll try to do 3 or 4. I mean, I think number 1 is kind of the explicit fostering of that innovation, right? So providing that guidance, that innovation is encouraged, and maybe even specificity around how to share those results and showcase, some of the new technologies that are being implemented or tested. So providing that guidance. I think to the extent information sharing can be encouraged and perhaps technology embedded within that encouragement, right? If we have a common platform within which financial institutions can more easily share, even where we can share that data today, there's still not, as broadly accepted single platforms within which we can do that. And I think ultimately that would help further those efforts. And I think on the kind of public-private partnership side, continuing to foster those relationships, whether that's through specific frameworks where those collaborative sessions can take place, being able to transmit information and share across FIUs more seamlessly. And of course, what does that feedback loop look like back from law enforcement or FIUs into the financial institution so that we can keep getting better, or keep tuning our automation or ways in which we can better serve law enforcement those insights in a way they can comb through them. So I think those would be top priorities.
Good, and good ones, I think. So maybe Tom, because I don't see your camera, so I just want to make sure you have your your chance as well.
Happy to offer a few more thoughts in the space. Just on the measurement piece and encouraging that testing, a couple thoughts. We often see running these systems in parallel with the rule-based system being something that's encouraged, and we would agree that's important. But I think going one level deeper, really understanding when there's performance differences aren't always a bad thing. Like the rules-based system might find an alert by pure luck. And it might not actually be related to the rules-based system. So understanding the nuance there and providing guidance that, hey, it might not be 100% coverage against the rules-based system because it's getting lucky, et cetera. I think that's one piece that can help encourage innovation. Another piece on that is, again, if from a traditional machine learning perspective, you'd look for labels on past instances of money laundering. And if you rely on only the rules-based system to provide those, you're missing large parts of the problem space. And so encouraging exploration into other parts of the problem space is key to ultimately finding some of the things that are missed. And this is going to require a tight feedback loop with bank investigators as well as other stakeholders to determine if some of these new risks are actually real. So that's one. The second is the potential use of cloud technology to accelerate development. For example, to really apply machine learning, you're going to have to do it at scale, and things like ML training. It's classic bursty compute that's much better done on the cloud often than traditional on-prem software. And if you can increase the cycles of exploration from an ML space, you can significantly increase time to value for institutions to actually see value coming out of those. And proper understanding of how to protect data on the cloud, et cetera, is a core piece of that. And the cloud vendors are investing a lot in that. And then the final thing I'd say here is uncertainty around explainability, I think can really slow down exploration. I talked a little bit about making it understandable for business users. That's one piece, but from like a data scientist and ML standpoint, making sure that complex techniques can be used if proven robust is really important. Like this is not a simple problem, and simple solutions I don't think will ultimately carry the day here. So embracing some of that complexity, if it can be proven to be robust and explainable, I think is important. And we often see some hesitation around how complex is okay. So I think some clarity there could help as well. So just a few other thoughts on some things that we see could increase velocity on the AI side.
Maybe Darren, over to you. Any last thoughts?
Yeah, no, definitely. Thank you. So obviously we've talked about the need for a regulatory framework to encourage data sharing. That's massively important. An easier adoption of new technologies, again, very key. But also we talked a lot about new technology and AI and machine learning during this talk. But it's not so much AI and machine learning, it's very much using the right technology for the right business problem is what we've got to focus on. There are huge advantages to AI and machine learning, and it offers huge potential, but it's not everything. So it's about the right technology for the right business problem. And if we do it that way, that will also help us to encourage the adoption of tech and make us better. So that would be my three.
Thank you, Darren. Maybe Hartwig, last words?
Yeah, famous last words. I think more harmonization and true pan-European market. I think, it reduces time to market. It allows new entrants to come in, makes it more attractive, makes Europe more attractive. That together with innovative supervision as the second point, all supervisors, authorities, FIUs working together to understand what the risks are and really work with the business and the business work and the industry working with the authorities and the public side to also explain what we are doing. And then I think this needs to be formalized, as I said, in some sort of document which gives and I think that the risk assessment is the right place to ensure that you have a basis in order to apply this in practice as well, in a good and balanced way.
Thank you, Hartwig. And maybe just to finish, Noé, I don't know if you have any final thoughts that you would like to share with our panelists.
Well, thank you very much. Well, honestly, I don't know what to say, because well, I think that maybe regulator and the industry have to work together this journey. To be closer. Maybe the industry should show their capabilities, their limitation, also their failures. But just today I have a meeting with this kind of anti-fraud provider, and it works. Some solutions are there. So maybe if they show their potential, maybe the regulator may force the industry to invest more in this solution, because it really works. We are losing these wars against criminals. We are 3 steps behind them. They have time, they have money that they are reinvesting. They told me this morning just almost 70% of their incomes to update their techniques. So, we have to do something, because as I say at the beginning, we are noticing an increase of the frauds. So, well, I think they have to approach both positions. Maybe the regulator are too far from the industry, the new technologies. I don't know. They have to sell much better their product, to the regulator, to encourage them to change the regulation and to force the industry to invest more in this field. Thank you.
Thank you, Noé. Well, I hope that working everyone together and private sector with the regulators, we manage to fight this and win this fight, let's say. I would like to thank you very much to all of you for being here with us today. We're running out of time, so I just wanted to thank you for taking the time. It's been a pleasure to be moderating this panel with you.